Welcome to the HC Commodities Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. This podcast is produced by HC Group, a global search firm dedicated to the commodities sector. Across the world, commodity producers and refiners and processors are considering or embarking on building out trading and marketing capabilities. In this episode, we're discussing why they're doing it and the challenges and complexity about implementing a commodity trading platform. Our guest is Talis Bennett-Verschure. Talis is a director at Baringa Partners with their energy and resources practice and is daily working with organizations in the commodities world, helping them define and implement trading capabilities. This is also a subject close to my heart and HC's capability. We've been building out teams around the world over the last few years in trading and marketing for just these types of organizations, finding both the leaders as well as the key personnel to deliver the transformation and change. Alongside that, our talent intelligence group provides much of the data, particularly around compensation structures, that informs boards and executive committees on how they're going to remunerate and reward these groups and design the right structures to meet their goals. And then finally, Enco Insights, HC Group's sister business that provides experts to these organizations in advisory roles to help navigate the many changes we highlight during this discussion. As always, though, please do leave us a positive review on the platform you're listening on, or subscribe to the channel on Apple Podcasts or Spotify or even YouTube. And as always, I hope you enjoy the episode. Talis, welcome to the show.
Great to be here, Paul. Very exciting.
This is part philosophy, part tactics. We're talking about how organizations can build out trading and optimization functions, and what are some of the accelerators to that, and what are some of the derailers. And the backdrop to this conversation is that, around the world, commodity producers, whether they are miners, oil and gas producers, or whatever it might be, are in the wake of the volatility unleashed by COVID and all of the pieces that we've been discussing in this podcast now for 4 years, are building out trading capabilities to capture margin as well as to help manage that volatility that's out there. So before I go too far down that, let's start on, broadly speaking, can you give us some definitions around the types of companies that are embarking on this journey or considering it?
Absolutely. So to your point around the volatility in organizations trying to understand how to incorporate trading. So the first group really are these large asset monetizer type organizations, and they're typically in well-established commodity markets. So for example, oil and natural gas as examples. And the kinds of questions, again, they're seeing increased volatility in the commodity markets. How do we scale up our activities and capabilities to capture earnings growth? And the second one are maybe the smaller companies that really succeeded in scaling activities during COVID. And these companies may be bulk physical commodity traders, jet fuel marketers. So at let's say certain edges or certain slices of commodity trading. And of course, their big question is, we want to continue our growth story. How do we grow another 10x with minimal impact to our secret sauce? And then lastly, and then maybe this is more similar to the first group, it's these large organizations that operate in commodity markets that are, let's say, in their own upward trajectory in liquidity and transparency. So a good example is petchems and metals. And of course, they want to capture both sides. So it's, how do we set up trading performance units to not only drive the development of these markets, but then also drive long-term earnings growth for our company?
Yeah, can you just dig into that a little? And I guess I intuitively understand the first two. So firstly, you're producing oil, you've been selling it at the wellhead or very sort of simple netback type terms, and you're seeing an opportunity to capture margin as well as manage that volatility by building trading capabilities. There's also getting closer to your customers in a world of energy transition as well. And then you've got that second group, which is the commodity merchants that are seeing an opportunity, are scaling already, but really need to put some sophistication into that platform to truly understand the risks and grow from stable foundations. That group three, what do you mean on an upward trajectory of liquidity and transparency? And perhaps use, I guess, metals as an example just to help us unpick that.
To scale trading businesses, being able to manage the risks, in particular the market price risk of your trading portfolio, so being able to value your portfolio is very important. And commodity markets operate on a spectrum of liquidity. So let's say oil, natural gas, and power are ones on the right hand side with a lot of liquidity and transparency. But there are markets such as metals, right? So copper, etc., where they don't have the global liquidity of flat and basis price positions to value the portfolio, but these less liquid markets are becoming more liquid, which means that there are new trading opportunities that start to uncover themselves.
Yes, that makes sense, and that's happening as again, I guess, as you mentioned, across petchems and a whole variety of commodities. Are there any? So, just taking a step back as well, there's the financial return and the risk management as well piece. Are there? I mean, I kind of alluded to getting closer to your customers. Are there other drivers in general that are pushing companies towards building these capabilities?
Of course, not only as you're saying in terms of managing the volatility, expanding earnings in terms of vertical integration and market operation is of course another important lever that's available. And maybe that's not specific to trading, conventionally trading, but it's, let's say, origination and marketing and finding new markets that can be served. And that's of course another big part of these kinds of trading transformations. Absolutely.
It would also seem to me as well, you face a backdrop of a lot of financial investment coming into the sector, PE firms with deep pockets looking at assets, and we saw this play out in biofuels, we've seen it play out in some of the energy transition pieces. The capacity of a trading capability to value an asset more competitively because it can extract that intrinsic optionality through trading, which necessarily an investment company or just an asset company can't. It would seem that's a point as well in terms of being able to expand the footprint of the business through better valuations of potential acquisitions.
So to your point on, let's say, the private equity players who are investing in assets, there may be more an interesting side of things, since, let's say, the typical approach is look for ways to get the transactions in place that are necessary to finance the asset, right? But then, of course, expanding on that and having a trading organization, to your point, to price and value the potential, let's say, conversion spreads across the asset, means that bigger companies, can be more confident in the value of the asset now, but then also over the lifetime of the asset's investment. And so trading companies are very, very important, supporting that valuation.
There are numerous entities that have been on this journey, are thinking about going on this journey, or midway through it. And I think, what will become apparent is that this is not a quick change. This is a multi-year program to actually build out these processes with fidelity across people, platforms, process. The key bit, I guess, we should start at is really that sort of vision and developing and building the case for why there should be a change, and then how you manage that communication around it in the context, of where we've seen this done well and where we've seen it perhaps struggle. Can you sort of start with, how do you go about defining that vision, and what is it, what is the scope of any given vision, and then we'll talk about where we've seen it, or you've seen it in particular, sort of implemented well.
Defining the vision is simple in concept, but typically underinvested in terms of performing it. So what you're trying to do is come up with compelling statements of what we want to be on, let's say, 5 years hence, or when we grow up, right? So that those would be what types of trading activities, the products, the geographies, the levels of vertical integration. To your point before about about the customer side. So the level of customer centricity is very important as well. And then from that, going through, well, what capabilities do we need in place in order to do these activities and also manage the risks associated with those activities? And then also, what are the measures and KPIs for success in this program that we're about to embark on?
Some of that is, inherent in that conversation is how much, what type of organization are we going to be in, and how much risk are we going to take, how much proprietary risk, how much third party flows might we take on, the challenge there in some ways, before we get into into the specifics, is trading is quite challenging, at least for me, to understand, right? It's not an easy suite of tasks that immediately makes sense to lots of people, right? I mean, it is a challenging construct. It's very complex, and this is in part why historically sort of Wall Street and so forth have discounted it as a performance center. Can you just speak to that for a couple of seconds?
I would say high level trading connects the let's say the inherent commodity flows and reduces risk, either using financial instruments or other means. And the issue with that is that it becomes a bit of a black box, meaning that so Wall Street and the investor community struggles to understand, well, how do we value the contribution of trading activities to enterprise earnings, since it moves away from a conversion spread across an asset or a geo spread across geographies, and then moves into other means, e.g., dynamic forward trading, trading around mean reverting spreads, etc. And of course, the shareholder community and analysts don't like that because it's very difficult to value the performance of that.
Yeah, and at the same time, the companies themselves are loath to provide specifics because that's obviously commercially sensitive data, right?
Yep.
So it's
Yep.
okay, right. So let's talk. So you wherever you are on kind of that risk and platform spectrum, and appreciating that all of that is going to be dependent on your financial situation, what assets you have, what your objectives are. We come to sort of how you actually, I guess, both come up with that vision, but also start to communicate it across the business and expand on those goals and drive that vision forwards. Where have, and we've both got some thoughts on this, but where have you seen this? What are the accelerators to success around that? Because this is really foundational stuff.
There's three main bits, but there's two that are really important. And the first one of that is really to insert experienced leaders. And so what that really means is look externally and bring in external business leaders who have gone through similar transformations in the past. Of course, what they can do, they can provide expertise, they can reduce the risk in the implementation, and they can provide practical lessons learned from their own experiences. That's number one. And then number two is really structure the alignment with senior leaders across functions. So whether it's, let's say, manufacturing or finance or treasury, credit, there's many places that will likely be changed across these trading transformations. And starting early, so even during the visioning, right, is very important, so that it can start to create consistent messaging that will start to cascade through the organization. And maybe the last one specifically is the concept of data-driven storytelling. And so what that really means is using market analysis and various, let's say, value pools that you want to target within your vision to do a P times Q and show the amount of value potential that exists in this transformation.
Yeah. So whether you have a leader in, it's having that senior leader who he or she has that, the deep expertise in building and running a commodity trading platform, whether you have that person sort of embedded in your DNA from maybe a previous iteration back in the 2000s, right? Or you're bringing that person in, and we've seen great examples of that. That takes enormous trust, and it also, particularly, it takes the trust of the executive committee and the board, and there's a couple of key figures in there, right? What, particularly, I guess, the CFO being on board.
Yeah, absolutely. The CFO is a, I would say, probably the most important person to get on board early, especially in the United States. And if you're a public company, the CFO and of course the CEO, but they're going to have to explain the trading contribution to earnings every quarter. And to your point before, right, be able to explain away trading contribution to earnings without giving up any proprietary information. And often, let's say these asset monetizers, so these less, let's say, advanced traders, the upskilling the CFO using the, let's say, the experienced leaders on how to think about trading and how trading works as a performance unit in the business is vitally important to upskilling the CFO and CEO.
Yeah, I guess the flip side of where the derail. Well, can you talk to where some of the derailers are? And I guess they're just really the corollary of those first three.
Yeah. So the main one is really the lack of leadership understanding, right? So sometimes senior leaders maybe don't fully grasp the cultural implications of expanding trading activities. And there may be a lot of head nodding in terms of, yep, this is great. Yep, wow, that's a lot of money. Wow, this is awesome. Let's do it. Without really thinking about what the implications are going to be in terms of, frankly, totally rethinking the way that these companies view the world. And so that's one big one. I would say the next is really unclear. So developing an unclear message, right? So having simple vision statements that can be disseminated more broadly within the organization is very important as well. And lastly, the insufficient dedication to defining the vision. So even though defining the vision statement, what we're going to be doing in terms of vertical integration, what does it mean for what we have to do in terms of our capabilities, it seems elementary, and organizations sometimes underinvest in it, but getting it done and getting it tight so that it can be shared broadly is, at least from what we've seen, is very important to success in these transformations.
Yeah, absolutely. Because all of this is then going to come down to people internally, and then the people externally that you need to attract. And without that sort of clear mission statement and the what competitive advantages you bring to the table and where is this heading and why are you doing it, it's very easy for the message just to devolve into, oh, we're going to be like X, right? You're defining yourself suddenly by other people. And that's a very dilatory message in the market. Whereas actually a very clear principle on why you're doing it, why you can play in that space and why you can win is much more powerful internally and externally. It's interesting you mentioned sort of that emphasis on short-term gains. And this is always, I think, a challenge, and perhaps very much more challenging when you're building a desk on a hedge fund or whatever it might be, where the temptation is to kind of prove the capability by, dare I say it, swinging for the fences early. And one mistake and in those critical first couple of years can really destroy the trust of the leadership and the organization in what you're attempting to do, right? So that commitment from leadership to go slowly and actually build out the capability seems to me to be key.
That's very important. And of course, incorporating lessons learned and staying in for the long term is vitally important.
Right. So you've developed your vision and the strategy to win, and how that's based on your competitive advantages. You've defined sort of what capabilities you're going to build out. I guess the next bit is you're putting in an operating model to actually achieve that, and then you're putting in the technology and the platform, we'll include people in that, to actually deliver on that operating model. Before we go any further, what is an operating model, and can you just put some sort of, I guess, some meat on the bones of that?
An operating model, most simply, is a definition on the way that work works. And so what that actually is a functional blueprint for how the trading performance unit, or how you as a trading organization will operate. And it focuses on organizational structure, processes, technology, people, and governance. And the really important part in terms of the operating model definition, it's framed by delivering on the vision that you've aligned on.
Just expand on that a little bit. So, with an example or two. So this is, you've set out, as you said, you set out your vision and your capabilities. How do you go about thinking about an operating model? Do you take a notional trade and think about how that would flow through the organization and then build those capabilities around it? I just sort of, trying to put a bit more depth into that.
So that's a way to start, but I would maybe a a simpler way would maybe just to start a little higher level, and let this is assumption here on, let's say you're a larger asset focused company, and it's really to think about, well, how do our various business and performance units work together? So let's say you've got a manufacturing business, right? Let's say you have an oil production business, you have a trading business as well, and it's really focusing on, well, how is trading going to exist as a performance unit within the broader portfolio? And so specifically, what that starts to look like is, how are the risks and the value going to be shared between, let's say, the production, manufacturing, and the trading performance unit? And how do we draw let's say, the connectivity points between the organizations, right? So the business units at a very high level. Then from that, it's starting to define how detailing out how the value will be shared, right? Of course. And then it would be more than likely going into the governance of the trading performance unit, right? And making sure that the correct policies are in place to enable the target state. And then going into org structure, processes, technology, and of course the people side. And to your point before on, let's say, dropping a coin through a particular trade and seeing how that impacts the organization, that maybe will come a little later during the various rollouts of the operating model as the bigger picture has been defined.
Yeah, and it's not simple, right? I mean, and these are things that even organizations with established trading capabilities wrestle with, things like, obviously, transfer pricing. But so in some sense, trading is an all of company activity. And, how do you either embed those capabilities in each of your sort of business units, which are, often can be split by commodity or function, like you say, or do you have this one sort of unit sat on the top of all those other businesses? I mean, it's inherently very complex, and it's not necessarily there's one perfect answer, and there's a lot of trade-offs in all of that, right? So I imagine, this is one of the bits that really does take a long time to piece together and think about, made inherently more complex if you don't have clarity over why you're doing it and how you're going to win in the first place.
The importance of getting early alignment with senior stakeholders on the vision that will start to feed into defining the operating model. Since there are stories of very, very extensive battles on how trading will operate as a performance unit within these broader business units, and not getting it right will likely lead to false starts and let's say heavy investment in processes and technology to enable, let's say, potentially a suboptimal operating model, which likely will need significant reinvestment as trading activities grow and scale.
And these are quite painful transformations, especially if you've got sort of quite entrenched business units already. As you say, this isn't sort of a nascent organization building it as part of their primary capabilities, but someone re-engineering this. And that comes back to the leadership, and the support of that leader or leaders to explain consistently and often repeatedly the why about what's going on here. And it's not sufficient just to sort of, say it once and walk away, right? I mean, you're going to have consistent pushback and challenges to this transformation because it can be quite threatening.
Absolutely. And the constant repetition of of this is the story and this is the journey we're on, this is the why, this is what we're going to do, this is what we're not going to do, is vitally important. And if folks are saying, yeah, we get it, that may be a good thing. Additionally, maybe one thing to add on this operating model piece. So in addition to the, let's say, the importance of bringing in, let's say, leaders and potentially external leaders early on, is the underinvestment in talent planning and talent acquisition. So making sure that there's planning to reskill the existing folks, right, of the organization, and also, and I'm sure, Paul, you can speak much more extensively on this, is making sure that you onboard the right talent to enable the long-term success in the new model.
So let's definitely come back to that in a second. But can you just, for the sake of clarity, it's my fault, but when we talk about the operating model, what are those key sort of check boxes from an accelerator that give you a pretty good indication whether it's going to work or not?
Aligning on trading as a performance unit and aligning early on it. And so this will be framed by the vision and the value case. The next piece, of course, on the governance side, I would say, is the early alignment on the trading risk policies, metrics, and controls. Since let's say the risk policy is typically what's systematized in the transaction system, so in a CTRM or ETRM, and then the metrics and controls, of course, dictate the reporting requirements, audit requirements, controls in place on delegations of authority, etc. What that really means in terms of early alignment, it's really understanding the risks inherent in the new trading activities, how you want to mitigate, manage, and report on those, and then start to develop or potentially expand the mandate of middle office as well. And then lastly, the punch list of an accelerator in this operating model definition is, again, using industry experts. So having an external view, who've gone through this before, to incorporate lessons learned and reduce risk.
Yeah, I think that's key. Obviously, you've got the likes of yourself, Baringa, to help shepherd and implement this process and feel part of that. That's part of why we've created Enco Insights, to put my own plug in there, which is provide exactly that, right? Is these seasoned, experienced experts who can come in and, for whether it's a short period of time or a longer period of time, be that sounding board and an advisory role, because these are, like you keep saying, right? This is complex to do, but it's also in some ways it's even more complex to stay aligned and stay on goal, because there's so many challenges from the market, from externally and internally, that are coming at you all of the time. And you can definitely see those organizations who built either a dedicated board but have a suite of experts that the leader can rely on and the teams can rely on to make sure you're avoiding the mistakes that have been made by others, but also just keep on goal. And I'll put links to Enco Insights in the show notes. But on the detractors or the derailing side, you've already mentioned that underinvestment in talent planning. And I guess, and this is, I'm in danger of talking my own book, but in the end, these trading businesses are professional service firms in a way, right? It all ultimately comes down to the talent, or at least historically has, that's delivering it. I think now there's also the how good your technology platforms are to kind of capture the information that you have somewhere internally in a drawer. And this is made ever more complex by the fact that often, by building a trading and marketing capability on whatever bit of that kind of spectrum you're choosing to put it on, of risk and reward, it typically involves a different compensation regime to get that team aligned and also to attract the right talent. And that can be a cultural and a financial challenge to any organization. And it takes a lot of planning and thought. And you and I have obviously worked on these in professional circumstances with clients. That takes a lot of work to actually get that piece right about what talent you're actually looking for and how that fits with the platform you're building, and then start to work out, well, what does that mean for compensation? What does that mean for culture to actually achieve that? And I think and that's all without the backdrop of it being a relatively talent short market globally. And These are rare profiles, rare professionals, and in demand, and it's tough to build that even if you've got those other pieces right.
Yeah, absolutely. And maybe one piece in particular on let's say on the transformation side and the change management side is making sure that folks in the organizations understand the reasons for the different compensation schemes. And maybe they won't rally behind it, but maybe more they understand the reasons behind it.
Yeah, and that actually takes real world market data that we've often been involved in, we have supplied and do supply, to actually sort of prove the case out that this isn't just being made up. This is all the different regimes out there, and this is the context of the marketplace you're going into. And I think everything ultimately comes back to the leader and the support of that leader by the executive committee. They've got to be on board with that. And if you're going to build quite an aggressive platform globally, there's always that uncomfortable moment, of the trader earning more than the CEO, as happened in BP one or two times way back in the day. And it was the CEO of BP walking down onto the trade floor and championing that performance, right? I mean, these can have profound impacts on an organization, depending on where you want to take it. And you've got to get that buy-in early.
Yeah, the anecdotes from traders making more than CEOs is one I've heard before as well. And companies that really do push trading activities and capabilities are absolutely comfortable and champion that some traders will make more than the CEO, as an example.
The energy and resources sector is experiencing unprecedented change. To help companies navigate this world and capture its opportunities, HC Group launched Enco Insights in 2023. Enco has rapidly become the leading global expert network dedicated to energy and resources. Enco Insights leverages HC Group's 20 years of connections and dedication to the sector to give clients the expertise they need to take decisions fast. Connect with Enco's experts for anything from a 1-hour insight call to a longer-term consulting project at encoinsights.com.
Just looking at our shared notes, the second derailer that you highlight is sort of rigid hierarchies and legacy structures. I think that's really important. Can you just talk on that for a moment?
This goes back to the vision and the operating model definition. So if you don't have executive leaders who are truly bought in to the trading transformation, then of course there's always going to be this desire for status quo, right? So be focusing on legacy structures, resisting change. And what that means is it'll create bottlenecks in decision making and execution and potentially duplicative activities that are very similar to each other. So let's say supplying assets, there may be two different performance units who are procuring maybe molecules internally or procuring molecules externally. And of course what that really leads to is a lot of overspend and potential rework.
Yeah. This is where you sort of end up with two competing units, one's supply and one's trading.
Yeah.
And the twain don't really mix, and it can cause all manner of challenges. But again, I think it just points to not that's these are very complex things to put in place and can mean fundamental changes for the existing legacy that can be perceived as losing half their role, right? I mean, I think it's these can be really challenging.
Again, it's making sure that the engagement, change management, and training happens even from the executive committee all the way down is a way to sort of break that blocker and the desire for the status quo. And of course, getting folks comfortable with the change and the value inherent to the organization is really the big picture driver.
Yeah, I mean, we haven't really touched on it, but I can imagine if I was sat in sort of operations or whatever it might be, and the business is doing well, and suddenly something comes down the pike about building out a trading capability, your mind would immediately go to the anecdotal horror stories. Keep on overemphasizing it, but there's quite a lot of I guess misperceptions, misconceptions, and some reality out there as well, which is why on earth would we want to build that kind of capability given what's happened, at X company in, 10 years ago, etc. So there's just a lot to overcome there.
At least in my experience and talking to folks in the industry, I don't think there is a magic potion for rallying, let's say, folks in operational roles and seeing the email come in saying we're creating a trading performance unit, and then of course going to the big P&L events that they read about in the newspaper. There's no magic answer. It's really around getting them comfortable with the change and explaining to them why the trading performance unit is going to be there, and really getting them comfortable.
Yeah, and it comes back to that point about not making mistakes early, right?
Yeah.
Actually, not losing money is arguably more important than making money in those first crucial years for that reason alone. Okay, so you defined your operating model. It's probably taken quite some time. You've wrestled back and forth about how it fits within the organization. Is it its own division, et cetera, and you've done sort of the coin slot test to figure out how it goes. That's going to cascade a series of technologies that are required for you to actually both capture and understand the trades and the risks within it, as well how to actually make trading decisions. Particularly if you're an asset-heavy business, that's really ultimately your competitive advantage in many ways. Choosing technology platforms and implementing seems to be sort of the bit where it all can come crashing down with sort of horror stories of spend and ending up with something that doesn't really do what you thought it would do at the start of the thing.
Maybe on this, let's say, technology architecture and platform piece, trading organizations or trading organizational transformations typically have a focus on, let's say, the CTRM or ETRM within it. However, there's many more, let's say, technology platforms and data decisions that will need to be made in order to enable the transformation. So all the way from, let's say, getting trusted data into the trading environment to relevant business users, so traders for pre-trade analytics, maybe for structurers, maybe also for originators as well. But then also making sure that the business processes are reviewed and updated as the technology is selected and implemented. Because what that really starts to do is it enables a key detractor, and maybe we can talk about this more in detail in a second, but it's enables you to sense check over customization due to business processes that maybe were defined without the technology stack in mind.
I think that sort of these things have a habit of, you've got lots of different groups start to get involved at this point, and you can, as you say, the platform can metastasize in terms of demands, and there can be certainly an over requirement in terms of reporting versus actually enabling the traders and the teams to do their job. And I guess complexity here is that you typically have, well, you absolutely will have an existing technology infrastructure group that probably are very wedded to their platforms as they have it already, whether that's SAP, etc. This can be quite a challenge to bring in this new additional platform that does require, again, kind of a whole of company transformation in some ways.
Yeah, absolutely. And that there are ways to, let's say, manage that technology change. Of course, there's one end of the spectrum where you would have two totally different technology organizations, so two totally different IT groups. But then, of course, there's middle grounds and potentially more effective ways of working between the enterprise IT and technology, and then also, of course, the trading IT and technology to enable trading activities. And maybe to jump into a potential accelerator, right? The importance of defining the technology selection and the IT related pieces, it's all about aligning with the strategic goals. So making sure that the right tech stack and integration and data considerations are made that supports the strategic priorities, but then also provides, of course, operational efficiency, scalability, and supportability. On the technology side of things, it's vitally important to prioritize proven solutions in the right places. So, for example, for transaction management in particular, so the workflow management of the physical transaction lifecycle, as well as, let's say, enabling the middle office to be an enforcer of the trading risk management policy, but then also a enabler of new business activities. Picking proven solutions, maybe a CTRM with a risk engine on top of it, is important, and making sure that you pick these solutions with the right fit. So the relevant commodity classes, the relevant modes of transport are there, and then to really go with the grain of those tools as well. And going back to what I was saying before about the process side of things, as these let's say proven solutions are picked, look for ways to standardize and simplify processes before customizing the IT solution. And maybe again this data and integration piece, right? So focusing on that early. So I'm sure, and I think I've heard this from podcasts in the past that you've had, is all about the data being key to enabling effective trading organizations. And it's not only, let's say, external market data, it's also internal data from, let's say, the assets, and then also enabling reporting of risks and compliance to trading policy, but then also making sure that the right data is provided to financial controllers, as an example, to enable the explanation of trading performance, earnings, contribution. And lastly, and of course, this is maybe a bit of a no-brainer, and I would say this is always in almost in every technology-related rollout. It's focused on incremental rollouts and prioritized by value. So implement in phases to enable value unlock, but then also to test the functionality, address gaps, and take users and stakeholders on the journey, right? So train them and have the communications in place so they start to see the vision and the value starting to be created.
Yeah. So red flags being, trying to build something from your existing platform and do it on your own rather than go to proven solutions. Certainly, as you say, is focusing down on the lowest hanging fruit initially and demonstrate that value through these systems rather than trying to do everything all at once. And then the data piece, that's you and I doing a whole other podcast on how some of these accelerators and derailers and strategies are going to be profoundly affected as we go into the AI age, and actually will be, and I firmly believe this is going to be an even greater reason for physical commodity producers, transformers, whatever they may be, to develop trading capabilities, because they're going to have such an edge in terms of data and capabilities that they have. So just a moment on I guess derailers on the technology side, and this might be giving some flashbacks to some listeners on how challenging this piece can be, and some of the challenges, stories that have come out of it.
Again, maybe to the point of the conversely of the accelerator. So missing the balance between enabling business processes and customizing the technology. So over customization of the as is, right? So to over customization to enable the as is, and really missing the opportunity for change and simplification. And of course, on the other side of only rolling out of the box is you're not able to enable the business processes that are required. In the end, of course, technology is an enabler, and it's an enabler of people doing processes. And so if the technology isn't able to do that, of course, it sort of defeats the point. Another key derailer is the underinvestment in change management and training. And maybe one piece in addition to this is the underappreciation of business users or trading users and trading leaders and risk management users and risk management leaders to understand the importance of getting the technology selection implementation right. And so what that means is the training isn't adequate to support users, which means that there's likely underutilization of the new technology that's been rolled out. There's resistance to change. And of course, what that may mean is things go back to being done on Excel spreadsheets and on people's C drives on their computers.
Yeah, this is something familiar to us all, right? I was just thinking within HC Group, right? You start putting too many mandatory fields or whatever it might be, processes in place that aren't actually definitively tied to the commercial output, and people just don't use it, and then you're losing that information, or worse, as you say, people are just circumventing the process. So less is more at the start, and actually making sure that what you are asking of people they can see the value from is pretty key.
To your point on the too many fields piece, is the very important balance in making sure that the traders can stick to the policy, of course, without having, let's say, too many accounting and back office related requirements on the deal capture side of things. And that really, from what we've seen, that really leads to problems in the rollout.
Yeah, and then finally, committing to a platform. You are getting married in many ways, right? I mean, this is a platform that's got to have the capacity to scale as you scale as well.
Choosing these solutions that don't grow as you grow your trading businesses, right? So in terms of realizing that vision, what that typically means and what we've seen, there's two outcomes. One is you aren't able to do new trading activities with the specific reason, as simply as risk can't model the implications of this new deal that an originator is bringing in and our structure is trying to price, which of course means that you can't do those kinds of activities, or you need to essentially rip and replace and have a costly replacement later. So to your point of this marriage is really making sure that the scalability is there to enable the trading activity growth.
Excellent. Can you sort of wrap it up with some sort of overall lessons? And I guess why this is important is that, there might be some people out there listening, starting or embarking on this journey, and hopefully this has given some food for thought. But on the flip side, lots of individuals are called, whether it's by HC Group or others, about potentially joining an organization that's thinking about building a capability or at the very start of it. This has been around the world a major driver of demand for talent, and I guess it's really instructive to be able to understand whether that opportunity, that company is, making some of the right decisions and demonstrating some of the key facets that are required to make this a success or not. So if you can just sort of give us your kind of, I guess, what do you think are the key points from what we've discussed?
Absolutely. And I really like the take on, if you're someone who's interested in joining some of these companies, maybe these are some of the key questions you'd want to ask in the interview process. So the first thing is, and I know we've repeated this many times, even in this session together, right? So it's start with a clear and compelling vision. So explain the why and what of the transformation. And so that's not only for internal alignment, but also externally, it can be explained as new people are being hired. Of course, the next one is design with the end state in mind and with a focus on preserving your core strengths. So what that really means is really building an operating model that reflects the desired future rather than being overtired on the current state, fine, but also making sure that it's built on top of the core strengths that you have as an organization. Lastly, rather, start early with change management and also incorporate key leaders and leader hires early on. So plan these cultural shifts and these skill development requirement and communication strategies as soon as the vision is defined and the operating model is starting to be commenced, and really continually train and upskill key folks in the organization on the skills and then also the cultural shifts that are happening. And lastly, of course, test, learn, and adapt continuously. So scale based on existing activities and iterate, roll out a value, so a value release, and refine approaches to incorporate feedback and lessons learned. So really what that's all about is break up the problem and show value as the transformation is going.
Well, excellent. Well, you and I have been talking about this episode for ages, and in fact, this is there's quite a bit on the cutting room floor. So hopefully, people appreciate us keeping it below an hour. But it's one of those episodes I think I'll certainly listen back to, because there's a lot in there and there's a lot of learning in there, and none of this sort of underestimates what a big challenge this is and how complex it is. But it's one that's being faced by many in the industry today, who are on various stages of this journey. So, Talis, it's been great to have you on. People will be able to find you on LinkedIn. I can put connections in the show notes as well. And I look forward to having you back on next year. And let's talk about how perhaps this is being updated and challenged by what we're seeing in technology and what we're seeing in people as well.
Absolutely, Paul. It's been a pleasure. It's very exciting to see what's going to happen, even in the next year, to your point. And I look forward to talking again soon.
Thank you for listening. To find out more about HC Group, our global offices, and our expertise in search within the commodities sector, please visit www.hcgroup.global.